Hello and welcome to BYJU'S Exam Prep IAS. Welcome to another session of Economy this week, wherein we'll be taking up all the important economy related articles which have appeared in various newspapers from 8th to 14th of October 2022, and we'll be analyzing these particular articles. So let's begin the discussion. The first very important article that you will start coming across henceforth in the newspapers is the idea of CBDC. That is a central bank digital currency. Now, I'm pretty sure all of you have the currencies, that is money in your wallet or let's say pocket. If you take out the currency, this currency that you are looking at is called as fiat money. Fiat money basically issued by the central banker, that is Reserve Bank of India. Now, this fiat money doesn't have any intrinsic value, but please understand, because the RBI or let's say the government of India through an order has given it value, that is RBI governor's signature is there, that fiat money will have certain value in the market. It can provide you certain claim over the goods and services. For example, if you take out the purse or let's say the wallet, and if you take out 500 rupees, what does it mean? You can go to the market now after the class is over or after the lecture is over, and you can purchase the goods or services worth or let's say equivalent to 500 rupees. But what if I were to say, rather than the physical currency, that is the paper that you're holding, which is not just paper but it is worth 500 rupee, RBI will issue one more type of a digital currency. Remember the term here, digital currency, and the name of the digital currency is nothing but central bank digital currency. Some of you might be thinking, sir, why is RBI doing this? We are so happy with the physical currency, that is the currency, notes and coins. Why is RBI doing it? Well, RBI is not the only bank in the global market, or India is not the only country which is looking at introduction of digital currencies. Many other countries have already done it. As per RBI's paper itself, more than 100 countries are considering issuing digital currencies, and 10 countries have already issued digital currencies. India is the next one in the line which is thinking of issuing the digital currency. The reasons are very simple. One, in the recent times, people are considering or people are preferring more and more usage of digital currencies or let's say the cryptocurrencies. What Reserve Bank of India, even RBI, that is Government of India as well as RBI, have been telling again and again is that cryptocurrencies are basically not issued by RBI. For example, if you have the 500 or 2000 rupee note, who issues them? It is RBI. Centralized system is there. And whenever, as per the requirement, whenever there is a requirement to promote growth or controlling inflation, RBI, who is the issuer of the currency, can control the money supply in the market. Whereas if you talk about let's say other currencies such as cryptocurrencies, it is decentralized, very risky. There is no value, intrinsic value for these particular cryptocurrencies, and RBI doesn't have any control over the issuance of these currencies. Citing many of these issues, RBI says, I want to try out the central bank digital currency. That's the first very important point. Second very important point, whenever RBI will print and distribute these currencies, there are expenditures incurred by Reserve Bank of India. And so is the case with all the other central bankers. Now, what if rather than printing the currencies or minting the coins, we simply replace those with the digital currencies? Will not the cost of storage, transportation, printing, minting, will all the costs come down? Of course, the answer is yes. So, citing all these reasons, RBI says, I want to try out the CBDC. So, earlier RBI had set up a committee. The committee has given the recommendations, and based on the committee recommendations, RBI wants to try out by issuing these CBDCs. Now, apart from this, there are many lacunae or let's say many gaps which have not been explained completely by RBI. Even if you read the complete paper which has been published by RBI, which is more than 50 pages, You will not get the complete details, and please don't read the complete paper, not at all required for UPSC. But what will be the model? The paper simply says there will be two types of CBDCs. One will be issued for retail users and the second will be used for wholesale market users. Right? That is, one will be referred to as a CBDC R, retail CBDC, and the second one will be wholesale CBDC, CBDC W. And who is allowed to use it? For interbank transactions, CBDC W will be utilized. For other transactions, retail CBDC, that is CBDC R, will be utilized. But either you talk about R or W, who is going to issue these currencies? I'll repeat, who is going to issue these currencies? Don't say that, sir, CBDC is not a currency. No, my dear, CBDC is also a currency. And more very importantly, CBDC will also be counted as a part of fiat money issued by RBI. So either it is physical currency or the cash that you are having, or in the coming months as proposed, if RBI issues the CBDC, both of them will be counted as a part of the fiat money, both of them will be legal tender, and both of them will be issued by Reserve Bank of India. The next very important point. Sir, what is the model? How can I utilize? As of now, no details have been provided. What RBI simply says is that these digital assets or digital currencies are easily transferable, freely transferable into cash. For example, one model that has been given by one expert says that imagine you have a wallet, just like you have a wallet for holding or storing cryptocurrencies. You have a wallet, and now you can simply transfer these cash that you have or the account money that you have. You can convert that to digital currencies and transfer that into this wallet. And as of now, various experts have pointed out that if you keep money in your bank account, you will earn interest. But if you convert that into digital currencies and if you keep those in the wallet, then no interest shall be provided to you. And that is the precise reason there is also concern or criticism related to this. That is, all of us, right, including me by the way, we are so much accustomed to making these digital transactions now. For example, we use UPI and make a lot of digital transactions. So many experts have criticized that if people in India more and more are accustomed, are comfortable with the digital transactions, what is the point of even introducing a digital currency of this sort? And why will people simply transfer the funds from, let's say, the bank account into the digital wallet and forego interest? That is also a drawback here. So these are certain very, very important points you need to be wary about or be concerned about in the context of RBI readying the pilot to launch the digital rupee. Apart from this, RBI says it will promote financial inclusion. It will promote digital literacy amongst people. It will basically help even in rural part of India where a lot of transactions happen in lower value, etc. So these are certain points associated with CBDC. Now based on this discussion, I have given a question here. Consider the following statements regarding CBDC. It is a freely convertible with cash. Statement 1 is correct by the way. It is a legal tender. Statement 2 is correct as well. What do you mean by legal tender? It is referring to cash or let's say money issued by the central banker which can be used to pay as a claim. That is, whenever you purchase goods and services and you have to satisfy a claim, you can use this money to pay for it. That is the basic idea for legal tender. So both the statements are true. Right option for the question will be option C, both 1 and 2. Let's go to the next article here. Modhera, right, a small village has been basically announced as a solar village, has been declared as a solar village. Now what are the important points here? First and foremost, remember this. Whenever they say solar village, it simply means they are able to harness the sunlight, they are able to convert the excess amount of sunlight they are receiving and they are converting that into solar energy. And as per the government of India, it says that in Modhera, right, there are 1600 to 1700 houses which have been electrified, which means they are using the solar panels, and these particular solar panels are able to utilize the sunlight that they have or sunlight they are receiving, and they are able to convert this into electricity. And the amount of electricity that is being generated in this region is much more than what is actually required in the region, which simply means what out of the total electricity, small part of the solar energy is utilized for using in the household or for electrification in the household, and most of the excess amount of electricity produced is being supplied to the grid. And that is a precise reason the article says that large number of households, the electricity bills have come down, and many of the households have been able to earn a certain amount of money out of this. How is that possible? Argument is that when you supply electricity, let's say 100 units, you produce let's say 200 units. You supply 100, but you are going to consume, right, let's say another 100 units. That is, you are supplying more electricity compared to what you are going to consume, right? Let me give you data so that you can simply understand. Please don't by heart the data. I said you have produced 200 units. Out of that, right, you will supply all these 200 units to, let's say, the grid connected solar, and you consume 100 units, which means the company which has purchased electricity from you, the DISCOM distribution company, now will have to pay you, right, money for remaining 100 units. Now, how the money will be given, that varies from one state to another state. Policies will be implemented, but this is how some of the households are able to earn money out of this. That is one very important point. Second very important point is, there is a sun temple near this village. Remember this, there is a sun temple nearby the village, and many of you will focus on the economics argument of the article, and UPSC might simply ask a question on the historical significance of this sun temple. That is art and culture question on the sun temple. So please be very careful, read about that as well. So there is a sun temple nearby this village, and it has been found that in the vicinity of the sun temple as well, now the solar panels have been installed, and as a result of this, electricity generation has happened. Until very recently, the sun temple used to be open till 6 p.m. in the evening. Now this has been extended till 10 p.m. And a light show, right? A light show also has been started thanks to the implementation of solar project here. That's the second point. Now, third very important point. Having said so, despite so many positive outcomes related to Modhera village, which Government of India even highlighted, there is a concern which has been raised. What is the concern here? Whenever the houses have got this solar unit fitted and they want to sell the electricity to the distribution company and earn money on it, they need to install new meters. That is, so the solar meters as well as electricity meters, and equipment has to be merged. Now, many of the households which have the solar units installed, they have not been able to get these units merged. It is happening, but it is going at a very, very slow pace. As a result of this, the article itself states, many articles did not cover it, but this is a concerning point related to that. Many of the households, as a result of not being able to merge or get the meters merged, are not able to get the benefits of the solar units installed on their households. So these are the three very important points associated with the solar village or declaration of Modhera as a solar village. Let me go to the next article. Credit guarantee scheme for startups. In the last couple of weeks, we have been discussing again and again concepts related to startups. In addition to those concepts, one more concept you will have to add now. That is Government of India announcing establishment of credit guarantee scheme for startups. CGSS. Now, what is this idea of a credit guarantee scheme? Let me explain the basic concept behind that, then we'll look at the factual information provided in the article. Now, imagine you go to a bank and you will apply for a loan. The bank manager says, great, I will give you a loan, but I need certain security, I need certain collateral. You do not have any security, you do not have any collateral. Then the bank might simply say, sorry, without any security, without any collateral, I will not be able to give any kind of a loan to you. If I give a loan, I am taking huge amount of a risk there. Now, what if government will come into the picture and say, give the loan to the borrower. If the borrower does not repay the loan, follow the process here. If the borrower does not repay the loan, up to certain percentage of the loan that you have given, the government would be providing it. I'll repeat it again, very simple concept. The government tells the bank, if the borrower is unable to repay the loan, don't worry. I will repay on behalf of the borrower, but not the full amount, up to certain limit. For example, it could be 70%. It could be 75% of the sanctioned amount. It could be 80% of the sanctioned amount. And if you have been reading economics very carefully and you have read about the MSME sector, there is one very important reform which has been implemented by the government, Credit Guarantee Trust for Micro and Small Enterprises, CGTMSE. Credit Guarantee Trust for Micro and Small Enterprises. Under the CGTMSE, Government of India is providing the same concept of credit guarantee for the loans up to certain limit which are issued to micro and small enterprises. That is first very important point. Second very important point, whenever Government of India provides such guarantee, that is the credit guarantee. Credit guarantee means whenever the loans or credit is issued and the loans are not repaid, certain guarantees are provided by the government. This is nothing but credit guarantee. Whenever such credit guarantees are provided by the government, by the way, I am discussing second point now. What it will do? What is the use of it? Simple. Whenever government will provide the credit guarantee, imagine you are the bank manager, you will be much more comfortable to issue loans to the borrowers. You will find much more security, a higher amount of security now, because if the borrower doesn't repay, you can simply approach the government, get the money from the government. Simple. Third very important point, the startups generally find it very difficult to get access to credit. It should not be surprising to you now. Startups generally find it very difficult to get access to institutional credit. Investors will be there in the market, but institutional credit, they find it very difficult to get access to such a credit. Now, in order to address this problem, Government of India has proposed a new credit guarantee scheme for startups, CGSS. Now, coming to the factuals given in the article, which you don't have to remember for UPSC. Government of India says based on the amount of sanctioned loan, based on the loan value which has been issued to the startups, certain amount of credit guarantee will be provided by the government. For example, again please don't by heart this, the extent of transaction based cover will be 80% of the amount in default if the original loan sanction amount is up to 3 crore rupees. 75% of the amount in default if the original loan sanction amount is above 3 crore rupees, and up to 5 crore rupees, and 65% of the amount in default if the original loan sanction amount is above 5 crore rupees. By now, I'm pretty sure some of you will be confused. Sir, you simply read out the data. What does it mean? Simple. Whenever the sanctioned value is up to 3 crore rupees and the borrower defaults, whatever is the defaulted amount, up to certain value, the government will guarantee it. If it is more than 3 crore rupees and up to 5 crore rupees, 75% of the amount that is defaulted by the startup will be guaranteed by the government. If it is more than 5 crore rupees, then 65% of the defaulted amount will be guaranteed by Government of India. Which simply means if a startup takes a loan and defaults whatever is the amount which is supposed to be repaid by the startup, defaulted amount, up to certain limit, government will pay it. With this measure, Government of India says they will be able to ensure that startups now will be able to get access to institutional credit. Not only from the banking sector, even from NBMCs, non-banking financial companies, even from the SEBI registered alternate investment funds. Now the funds can flow to these startups. So this is one more very important point, or one more very important scheme which Government of India has taken in order to promote the startups in the Indian economy. Let me go to the next article. ARCs in IBC or under IBC. What is an ARC? Asset Reconstruction Company. Generally the asset reconstruction companies, there are more than 20, in fact 28, around 28 in India, have been one set of institutions which have been helpful in reducing the stressed assets in the banking sector. That is, they generally take the stressed assets from the banking sector, try to turn it around, try to find a buyer, or let's say, right, securitize the asset, etc. But over a period of time, ARCs have not been performing very well in the Indian economy. Unlike, let's say, Western economies where the ARC's performance has been much better, ARCs have not been very helpful in reducing the stressed assets in the banking sector. And that is one of the reasons why Government of India went ahead and introduced Insolvency and Bankruptcy Code, IBC. But under the Insolvency and Bankruptcy Code, imagine here is a company. The company will take a loan from, let's say, a bank or let's say a lender. It doesn't repay the loan. Now the lender can simply sell off the asset, that is the company, to a buyer in the market. But this buyer, along with many other prospective buyers, will have to apply and will have to come out with a proposal at what price they want to purchase the asset. And these prospective buyers are called as resolution applicants. Remember the terms now. Resolution applicants, RAs. I'll start using the short form here, RAs. Now, earlier or until very recently, the ARCs were not allowed to apply as resolution applicants. Simple. ARCs were never allowed to operate in India as a resolution applicants. Why is that so? ARCs come under the regulation of SARFAESI Act, Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act. Under the SARFAESI Act, under one of the sections, what is the role of the ARC? What is the function of ARC is defined. And that section does not allow IBC or under IBC ARCs to be working as resolution applicants. It is not allowed. Very simple. Now many of you simply say, sir, how is that possible? We should allow them. Of course, yes, you know that, I know that, we should allow them. But generally, whenever you talk about these kind of institutions, there will be one or the other law which will play a dominant role in deciding what kind of function they are supposed to do. For example, many of you at multiple points of time would have thought, why is RBI not investing in the Indian market? Underline the term investing. I'm not saying, right, stabilizing exchange rate. I'm not talking about open market operation. I'm simply talking about the term investing. For example, why doesn't RBI purchase a lot of land in India, construct real estate and sell it to you? Can they do that? Of course, yes. They have a lot of money. Why not then? Why doesn't RBI purchase the shares of company ABC in the market, sell them, make huge amount of profit? You think RBI doesn't have money? Of course no. The reason is very simple. Under one of the sections of RBI Act of 1934, the functions of RBI are defined. And as per that section, RBI is not allowed to do any other investment except ABC like this. For example, the money that RBI has, they can use the money to purchase government securities of Government of India, allowed. state government securities allowed. They can purchase the treasuries of foreign countries allowed. But beyond that, they are not allowed to invest in any other, right, let's say functions or any other, let's say, investment avenues. In the same way, apply the same logic to ARCs now. Right? Many of you simply say, sir, why were the ARCs not allowed? Simple. Under SURFACE Act, this was not considered to be a function of ARC. And as a result of this, what would happen? Imagine rather than having 4 buyers including 2 ARCs, now there will be only 2 buyers. And if there are 2 resolution applicants, competition would be limited. And if the competition is limited, don't you think the amount of recovery the lenders will achieve or will get will also be limited? In order to address this, what RBI has done now is, RBI says, I will allow the ARCs to work or to function as resolution applicants, but with conditions. Not without any caveats, with caveats. What do you mean by caveat here? RBI says, 1, a board approved process should be put in place. The ARCs should have a board approved policy to do this. Second, not all the ARCs allowed, only such ARCs which have net owned funds of more than 1000 crore rupees will be allowed. If you are not going to meet this criteria, no, you will not be allowed to work as a resolution applicant. With this, RBI says the competition in the form of higher RAs will increase. With that, the recovery will also increase for the creditors here. Having said so, many experts have pointed out that many of the ARCs will not be able to meet the criteria or the conditions that have been imposed by RBI. So in the near future or in the next coming, right, couple of months or let's say even couple of years, you may not see many of the ARCs, despite having an opportunity, they will not participate or they will not be eligible to participate as a resolution applicant under IBC. So that would be limiting the implementation of the reform itself. So these are certain very important points regarding RBI allowing ARCs to function under Insolvency and Bankruptcy Code. Let's move to the next article. Government of India has announced one-stop centers or is considering announcement of one-stop centers. What is this one-stop centers? Government of India says we will be setting up 600 one-stop centers at various villages throughout the India. And with these one-stop centers, farmers need not have to be worried about, right, the benefits. Farmers need not have to be worried about getting access to fertilizers, seeds, etc. There will be one-stop centers or let's say one area or one shop which will be providing all these services to farmers now. In fact, if you have been reading the newspapers, you would come across or you would have come across one more concept, Raitu Bharosa Kendra, RBK, Raitu Bharosa Kendra, very famous now, very famous. It was there in the newspaper. Please go through that. Raitu Bharosa Kendras which have been set up in Andhra Pradesh are very famous now. In fact, African country, the ministers from African country have come to Raitu Bharosa Kendras. They have sought help from the chief minister to understand how RBKs actually work, and RBK is nothing but a one-stop center itself. In fact, it is much bigger than what is the proposal put forward by the central government here. Now, what is the central government proposing? One, the central government says the governments keep on implementing lot of schemes, but the benefit of the schemes do not reach the farmer. Why? Many of the times farmers do not have the right information. Many types of seeds are available, fertilizers are available, but the farmers generally don't get access to these kind of, let's say, subsidized fertilizers or quality seeds. They will not get access to, let's say, custom hiring centers, etc. Government, in order to address all of these issues, has proposed one-stop centers wherein all these facilities will be provided to the farmers. For example, I'll take one point here, because getting access to fertilizers, straightforward. Getting to know the knowledge or getting access to, let's say, benefits of types of seeds, right, or let's say sale of seeds, or getting information regarding various schemes of the government. These are straightforward points you can easily understand. But there is one term here, custom hiring centers. Custom hiring centers. What is this custom hiring center? Imagine a farmer is there. The farmer is a small or a marginal farmer. By nature, the amount of resources the farmer can utilize for the cultivation, for agriculture sector is limited. Now at this point of time, can you expect the farmers to spend a lot of money in purchasing technology, in purchasing mechanical equipments, etc.? No, that would not be possible. And because they are not able to invest more in mechanization or in the technology, their productivity automatically would be lower, overall production would be affected, and the amount of revenues that the farmers are able to earn would also be limited. Add into this mix, or throw into this mix, uneven rainfall or unseasonal rainfall, then basically the farmer's debt would keep on rising up, the productivity would keep on falling down, etc. One way to address this, of course nobody can address the issue of unseasonal rainfall as long as you shift to, let's say, the other forms of irrigation. So argument here is, one way to promote stable incomes for the farmer, or let's say higher productivity and production in the agriculture sector, is to promote usage of technology, usage of mechanization in the agriculture sector. And one way to promote mechanization in the agriculture sector is basically by setting up or by promoting the setting up of custom hiring centers, CHC. Under the custom hiring centers, the mechanical equipments or the technology is rented out, is leased out to the farmer, is not sold to the farmer. For example, if I am the farmer and I am unable to afford a tractor, then I can simply take the tractor on the lease from the custom hiring center for minimum number of time period as per my requirement, use it, return back the tractor and pay the lease amount or pay the rent amount. So Government of India, by implementing the one-stop centers, 600 plus one-stop centers, wants to promote all these objectives or wants to achieve all of these objectives throughout Indian economy or in the agriculture sector. So these are certain points regarding one-stop centers which are being envisaged by the Government of India now. Next article, the Zoomcar and SPAC. Zoomcar is an India-based car sharing platform. What do you mean by car sharing platform? Simple. Imagine I have a car. I don't want to utilize the car on day-to-day basis. I want to use it maybe once in a month, once in a quarter, etc. or once in a week as well. If I'm going to use this car, let's say twice in a week, what should I do with remaining 5 days? Why should I keep the car idle at my home for remaining 5 days? Can I rent it out for remaining 5 days so that the cars can start making me money? For example, imagine for 5 days, I will rent it out to you and you will pay me money for having utilized the car for 5 days. And basically, after the 5 days, for 2 days, whenever my requirement is there, I'll be utilizing the car. And this facility of renting out these cars, the middleman that will be there is nothing but Zoomcar. Zoomcar is an app, it's a platform which allows the customers to get in touch with the car owners. It is a car rental, right, or car sharing or car rental sharing, right, platform. This particular company has operations not only in India, outside India as well. Now, what is the point here? Zoomcar has plans to go public. What do you mean by has plans to go public? And many of you will ask me, sir, should we keep on reading about all the companies which want to go public? Of course no. Hundreds of companies on monthly basis or let's say on annual basis will plan to go public. Do you need to read all of those companies' information for UPSC? No, but this is important. Why? The second part of this statement is important, that is through SPAC deal. What is SPAC? Special Purpose Acquisition Company. SPAC simply means Special Purpose Acquisition Company. What is a Special Purpose Acquisition Company? Let's take a simple example. Imagine there is a company XYZ which wants to go public. Rather than directly going public, what this XYZ will do is, this company will be acquired by another company, let's say ABC, which is already public. Public means what? Simple concept. Whenever we say a company has gone public, is public, it simply means the shares of the company are available for trading purposes. For you and me, the shares are available for trading purposes. Whenever the shares of the company are available for trading purposes, for example, Infosys. Is it okay if I say that the shares of the company Infosys are available in the stock exchanges for trading purposes? Trading means buying and selling. What about, let's say, Paytm? Many of you would have invested in Paytm, burnt your fingers. Zomato? All these companies are public now. Meaning what? The shares of the companies are available in the market for trading purposes. Now the company ABC goes public, issues the shares, collects a lot of money, and using that money, they will purchase the company XYZ. And what was the starting point of this example? XYZ wanted to go public. Rather than XYZ directly going public, what they do is, it will be purchased by one more company which is already public. But please understand this. Many of you believe, sir, this is nothing but acquisition. Right? The specialty about this acquisition is that it is unlike one company acquiring another company and both the companies having certain operations. For example, I'll just give a simple example. It is not happening, don't be worried. Imagine a company such as Zomato, which is operational, has its own assets, etc., acquiring one more company, right, which has its own operations. This is one example. But in this example, ABC doesn't have any other operation, right? ABC does not have any business. Its only work is to raise money by selling the shares in the public, collect the money, and use this money to purchase one more company which wants to go public. That is the precise reason such companies, I am talking about ABC here, such companies are also referred to as blank check companies. Remember this. Such companies are also referred to as blank check companies. Right? And this company ABC is nothing but Special Purpose Acquisition Company, SPAC. And the last year also the concept of SPAC was there in the newspaper. But for whatever reason, UPSC has ignored this idea. And now because of this company Zoomcar, SPAC has again come into prominence, has come again into discussion. Please be very, very careful. Now based on this discussion, I given a question here. Consider the following statements regarding SPAC. These are called as blank check companies. Statement 1 is correct. Before issuing the shares or IPO, the company gives the complete details to the investors regarding the company that it is acquiring. Meaning what? The statement simply means ABC is about to sell the shares in the market, go public. ABC will tell its investors the details of the company they are trying to acquire. They are thinking of acquiring. Is it a correct statement? Absolutely wrong. Remember this. Whenever you talk about a SPAC or a blank check company, the company will issue shares, collect a lot of capital from the market, but they will not know which company they are thinking of acquiring or they are trying to acquire now. It is only after getting the money they will start scouting or searching for a company that they want to purchase using this money. And that is a precise reason whenever these are going for an IPO, that is SPACs are going for an IPO, the investors do not know which company they are going to acquire. And the company itself doesn't know with this money which company we will acquire. Only after getting the money they'll start searching and they will zero in on certain company and purchase this company using the money that they've raised by selling the shares in the IPO. So second statement is wrong. Right option for the question is option A, only one is correct. Next article regarding LPG and OMC, Oil Marketing Company. What is the discussion here? LPG is regulated, the price of the LPGs is regulated. Whenever it is sold to you, me or any household, the prices are regulated. Regulated in the sense what? Government will intervene in fixing of the prices. Government of India doesn't provide subsidy on LPG to everyone in India. To specifically some of the households, they have provided the LPG subsidy. For example, under Pradhan Mantri Ujjwala Yojana. But the problem here is that whenever the OMCs, oil marketing companies, that is HPCL, BPCL, IOCL, etc., whenever these companies will purchase the LPG or let's say the fuel and process it, prepare the LPG cylinders or refill the LPG cylinders, they will purchase the raw material at a very high cost. Right? Why? As per the article given here and as per the information given by the Government of India itself, the fuel prices, that is the LPG prices in the last 2 years, that is June 2020 to June 2022, the fuel prices have increased by around 300%. But on the other hand, the LPG cylinder prices have been increased only by 72%. Meaning what? On one side, the prices of the fuel has increased by a very large margin, but the retail prices have been increased at a price lower than the rise in the fuel prices. And as a result of this, the oil marketing companies are incurring a lot of losses. Government of India, not to provide certain cushion to the OMCs, has announced a grant of more than 22,000 crore rupees. It's a very simple concept. Sir, what is the importance of this in UPSC? Question can be raised on Pradhan Mantri Ujjwala Yojana. Question can be raised on direct benefit transfer in LPG. And questions can even be raised on oil marketing companies. Right, so these are the three very important areas connected to this article which is provided or which was provided in Hindu on 13th of October. In fact, this article was covered in almost all the newspapers. Let me go to the next article. In fact, the last article for this discussion related to inflation. Now, what is the important point here? Simple. The article discusses about CPI, retail inflation. And what has happened to retail inflation? From January 2022 till the month of September, the retail inflation has been more than 4%. And that is important because, please understand this, as per the Monetary Policy Framework Agreement, retail inflation is supposed to be maintained at 4%. You cannot always maintain at 4%, there is an upper limit of 6%. Now I told you that retail inflation has been more than 4%. Many of you ask me, sir, what about this number? Has it crossed even this number? Answer to this, by the way, is yes. Look at the graph provided here. From January 2022, last 9 months, for all the 9 months for which the data is published right now in India for CPI, the retail inflation has been more than 6%. Now many of you will ask me, sir, what about wholesale inflation then? And if you have been reading the newspaper, you will already know that wholesale inflation has been in a double digit numbers. 13%, 12%, 14%, 15% like this. So WPI is already in double digit numbers. CPI has been constantly above 6%. What is the importance of this number for policy making? Simple. RBI in the last 4 to 5 months has been increasing the interest rates. It has already increased the interest rate by more than 190 basis points. Now in the coming months, whenever the monetary policy review is going to be done, with a rising inflation rate or a higher inflation rate like this, it will make it very difficult for RBI to even hold the interest rate. Forget about cutting. It will make it very difficult for RBI to justify why they are holding interest rates. It will force the hands of RBI into increasing the interest rate. And the problem with that is, on one side inflation rate is higher, and on the other hand the industrial productivity is faltering, it is lower. And if RBI is forced to increase the interest rate, don't you think it will further dent the industrial activity in the Indian economy? And that is the precise reason RBI is in a very, very difficult position now in the coming months regarding the decisions on interest rate, looking at the position of inflation in the economy as well as the industrial productivity in the Indian economy. So these are certain very important points you need to look at in regards to inflation, which is given in the article. So based on this, I have given an MCQ here. Consider the following statements regarding inflation. In all the months of 2022, retail and wholesale inflation have remained over 6%. Statement 1 is correct. Both are published by MOSPI. Statement 2 is wrong. Both are not published by MOSPI. MOSPI basically stands for Ministry of Statistics and Program Implementation. The CPI is published, right? That is CPI the combined, right? Or CPI retail is published by CSO. Right, again some of you will simply say, sir, CSO is not there. Earlier it was published by CSO, now it is published by NSO. Whereas the WPI, Wholesale Price Index, it is published by Ministry of Commerce, that is specifically Chief Economic Advisor. So second statement is wrong, first statement is correct. Right option for the question is option A, only one is correct. Now, just to give you a glimpse of it, just to give you an idea, please have a look at what has been happening to WPI and what has been happening to CPI. CPI has been trailing WPI, and what you'll see is in this year you will see that the WPI has hit highest of 16%, 15% also has been breached, and it is on a downward path now. Whereas right, the CPI also, which hit right highest of more than 7%, has been moderating, but again in the month of the October, it has slightly increased. For the month of October, that is the data which was published in the month of October, the CPI has slightly gone up again. This is just a trend of both CPI as well as WPI for the last 1 year. So these are the various important articles as well as the questions related to articles which have appeared in various business related newspapers from 8th to 14th October 2022. If you like the initiative, hit the like button. If you have any suggestions, provide your valuable suggestions in the comment section below. And if you have not yet subscribed to BYJU'S Exam Prep IAS, kindly do it now. Thank you. Have a great day.